All right, testing. 1, 2, 3. We're running a little early this afternoon. Hope everyone's having a good afternoon. I'm gonna give everyone about a couple minutes. We usually start around 5. I guess I just couldn't wait any longer. All right, I guess we can get started. Pretty much everyone knows what's up with the markets today. All right, guys, good afternoon. Welcome aboard to our aftermarket recap. My name is Carlos Garcia, founder and CEO of G.A.R Capital. Thank you so much for taking time out of your day to join me. My apologies for not doing the morning note this morning. I was in a hotel in Miami, drove back in today. The hotel Wi-Fi wasn't actually the best for streaming, to be completely honest with you. So I just sent out the Reuters recap for the day in the morning, but I raced home as quick as I could to make sure I was here for this recap. So big shout out to Nick, who was driving with me back home. And that's about a 3-hour drive to get to Central Florida from Miami. Probably like 3, a little more because of traffic. While we were doing that, we saw all the market action as we were going, which was absolutely insane, to say the least. If you guys watched the Buffalo Bills Chiefs game last night, that's pretty much the only thing I can kind of equate this market today. But there's some technical reasons things happen where they happen, so we're going to go ahead and go over that. But let's start with the recap so far in the numbers wise. Dow Jones closed up 100 points, 99 points, up 0.29%. Perspective. The Dow was down 1,100 points right around 11 o'clock this morning. The NASDAQ was down 4% today. Literally 4% in the NASDAQ was up 0.63 today. S&P 500 was down 3%, up 0.28% today, 44.10. The VIX was at 37, actually it was at 38 at its peak, now at 29.90 below 30. Wow. IWM was the first one to go green, which is the Russell 2000 index, and that thing soared 2.3%. We caught IWM calls today. Well done, team. Thank you, Nick. Thank you, the team, for going over it with the guys to make sure that everyone was on point. We caught AMD and we caught IWM today. Excellent. Let's take a look at the equal weight S&P. Better than the regular SPY, up 0.75%. Remember, that's all equal weight 500 stocks. The dollar index, up 0.26% today, 95.89. The 10-year yield, which I said I've been watching, obviously I watch every day, 1.7325. That's a good sign. We're getting some lower yields. Looks like there was some bond buying. There was a good, healthy 2-year auction, as I heard on CNBC driving here. It was a healthy 2-year auction. The yield curve is doing better. And then we're also getting some buys on the fixed income side. That's a really good sign. Again, treasury bonds are being bought right around to kind of lock in that 1.8 level, 1.9 yield. I kind of thought that 2% was a big number to get short term, but again, some bond buying today, which brought down yields, which was very nice to see. I would love to see below 1.7, but again, that remains to be seen. Let's take a look at the precious metals. We'll take a look at that on the future side. Let's take a look at the credit markets. High yield credit, HYG, down 0.11%. Not terrible. That's pretty decent. Investment grade bonds down 0.31%. So again, looks like treasury bonds were getting a little more of the love today. Take a look at crude oil futures, down 1.25 today, 84.08 a barrel. Gasoline futures were down 0.85%, $2.42 a gallon. Gold futures were up 0.64%, even with the dollar up. Was interesting to see, 18.43 an ounce. Again, above that 1800 level, that's really good sign for gold. 24.03 for silver futures. They didn't do so well, down 1.17%. Taking a look at Ethereum and Bitcoin. That's what everyone wants to talk about. Futures on Ethereum, again, down 11%, was a lot worse. Bitcoin bounced, down 3.5% for the session, 36,835. Let me see if I can get you guys the actual spot price. So it makes things a little easier. Futures can be a little wonky. So let me take away these futures. I don't need them for Bitcoin and Ethereum. I think it's kind of pointless. Not really necessary. But if I can get investing.com, because I can get all of them, investing.com, crypto, I had it here, crypto. All right, I'm going to get you the updated cryptocurrency, and then we're going to go over some levels. We'll go over the heat map and what worked, what didn't work today. And there's a lot of stuff I got to go over with you guys, so no worries there. Bitcoin, 36,726, was up 3.87%. on the session, last 24 hours. Ethereum 24.37, green the last 24 hours, unreal. Cardano green 107. Terra, I've been seeing that doing very well, up 67.20. Solana 93.02, Ripple 60 cents, and Dogecoin at 13 cents. That was still red. But that's what we have for the majors. These are the top 10 in terms of market cap. So again, a nice bump in terms of cryptocurrency. Coinbase is down, so I can't show you my portfolio. I'm trying to upload it. Okay, here we go. At my low point today on crypto that I saw, I was at 100 and I want to say 13 or 112,000. Remember the peak, I was at 240,000. So imagine I'm $110,000 down from peak. Again, this is cryptocurrencies. We know the drill. Cryptocurrencies is all volatility. If you can't handle the volatility, then you're not going to get the big returns on cryptocurrency. Now you're probably wondering why I have IWM up on my screen. IWM just reported earnings. IWM beat on revenue expectations on cloud and consulting strength. Reuters. Let me give you the exact numbers on IWM. I think it was deleted. Okay, IWM. Q4 21 earnings. EPS did miss $2.57 versus a $2.89 EPS reading. Revenue did beat $16.7 billion versus a $15.99 billion, and operating EPS at $3.35 versus the estimate of $3.23. Again, that's why the stock is up pre-market. After market, it was down to 128.82. It was actually red for the day, but again, you can see the nice spike. Let's see if we get to 137. That should help a lot of tech tomorrow. IWM has been very weak. And in terms of Netflix, I know a lot of people were talking about Netflix last week. Netflix is the weakest of the FANG when it comes to earnings, and is the most volatile. So again, they had a tough one, but that is meant, I don't even consider the N in FANG for Netflix anymore. It should be NVIDIA now. But with that being said, Netflix, is that really a red marker to the market? I wouldn't say so, just for the simple fact that they really judge their earnings based on one metric, which is subscriptions. They really don't look at EPS growth or profitability. It's really is subscription growth, and that's really all that matters to the analysts that watch Netflix. So again, Netflix is pretty cheap here. Obviously, if I do bring that up, I prefer a Disney. I think Disney provides a better opportunity because you have the theme parks and the studio. It's more than just, Netflix is streaming. Netflix also has studios and stuff. But Netflix on the 1 hour is interesting. 409 could be a play. The 400s or 405s, keep an eye on that tomorrow. That might be a nice level to take a look at. That's the second level after the big earnings drop on Netflix. So watch it out for 400 calls. They should have a lot of volume. Let me see how much they cost. Now you're probably looking at your call premiums and your put premiums today as 412 most volume. Makes sense. You're probably looking at the markets this morning or later on during the day when we had that big flush. Put premiums were so high and call premiums were so high because of one thing, implied volatility. What do we have that's a big volatility mover? It's the Fed. We have FOMC on Wednesday. Now, we don't expect rates to hike this go around, but in March, I think it's already pretty much priced in. We're pretty much expecting that. But that's why the premiums are juiced. So you just got to be a little careful. If you expect more sharp volatility, then yes, premiums will be a little higher in terms of price. But at the end of the day, that's the environment we're in. Think of it as supply and demand. When things are really, really wild, things get priced out of whack. They usually don't go that expensive. But again, the CBOE today, I'm pretty sure, I haven't looked at the numbers in terms of options. It must have been a wild day in terms of what happened and stocks traded and contracts traded. Let's go to the heat map again. I haven't had a chance to look at it. We'll go to groups first. And on the group side, cyclicals gain. That's a really good sign of a bounce because they're the first ones to go down when things go down. Technology, we know the drill. Industrials up. Consumer defensives up. Communication services up. Those are the big boys, Google, Facebook, Twitter. Real estate, flat. Rates were down. Good thing for real estate. Energy, pretty much, even with a red day in terms of WTI crude, they lost very marginally, 0.13%. Utilities were sold off today, big time. Again, that's something to see because when utilities are red, that's usually a sign of a risk-on environment. Risk-on means that you're chasing higher yields. That's why your Bitcoin was up. That's why your high betas were up. Like the GMEs, the AMCs, the Palantirs of the world, the SoFis of the world. You know which one I'm talking about. Materials, financials round out the bottom. And healthcare doing just as much as energy in terms of return in the market today. Taking a look at the heat map on what happened in terms of the sectors, you can see, again, what has helped. Tesla being down 1.47% is concerning because they do make good profits and they are growing. But again, even with this relief rally that we had during the tail end of the day, Tesla didn't make it green. Microsoft did. Apple down about 0.5%. Google did. Facebook did. Amazon did. Kind of seeing what I'm seeing here. Nvidia was basically flat on the day. AMD, we traded calls, but it bounced very sharply. So again, Tesla being down is kind of concerning. Again, there may be some more weakness on a Tesla. I wouldn't go crazy on trying to scoop up the dip here on that. Okay, let's go ahead and go to the charts, which is the most important thing. We're going to go to E-mini futures, S&P. You know how important that is. We broke below the October lows in terms of the wick. Big deal. Why? Because that was correction territory. Correction territory was pretty much right around 43.28. We sliced through that, right? So we looked at that and we saw that earlier today was just waves of selling. Again, pick your excuse. You could say the Russia-Ukraine thing. You could say inflation. You could say Fed, whatever you want. It doesn't really matter at the end of the day because you're in control of none of those things. What you're in control of is looking at prices and asset prices correctly and reading the macroeconomic environment and the technical analysis. Remember, those two things need to be hand in hand. So I wrote on Twitter with the hierarchy of stock market movements. Number one answer, no matter what happens, is emotions. We're an emotion-driven market. Even algorithms have emotions because the programmers built the emotion into it. Granted, they don't have the highs and lows the way you think of it, but again, emotion is built in the market because waves of selling brings in waves of selling, waves of buying brings in waves of buying. You're always fighting two factors, greed and fear. And I'm pretty sure this morning you were very fearful. And then in the afternoon, right around 1 o'clock, 2 o'clock, you were greedy as hell. That's just the way it goes. Think of the stock market as like America's thermometer in terms of temperature. When things are good, that's the greedy sign. And when things are bad, people get very dumb, very scared and fearful. Both sides are dumb. Let me make that clear. In life or in business or anything else you do, you always want to have balance. You never want to have too high or too low. You kind of like the Goldilocks, right? You want to have that just right porridge. So again, too greedy, not good. Not good. When you're doing things that you don't understand, when you're buying those shit coins because a friend told you it's up, that's greed. Or selling stock here at the bottom because you think the world's going to zero. Equally stupid. But the idea and to understand is in order to kind of alleviate fear, what alleviates fear? Understanding and a confirmation. Those are the two things. Confirmation of the fear, fine. And of course, thinking about the future and making emotional decisions. But again, stocks are not going to go to zero, guys. We're not even at a bear market. We hit correction and we bounced. So again, if you're retiring at 65, you're a 401k, you do nothing. If you're still doing your index fund investing, you do nothing. If you're still an investor long term, at least 5 years or more, you have a 3 to 6 month expenses, none of this is concerning you. Unless you are literally a trader today didn't matter. That's it. If you were a trader today, if you were not a trader today, none of this concerns you. It really doesn't. If you pulled out of the market today because you were fearful, that's a mistake. Because now there's something that we're seeing here in the market that's extremely important. I'll tell you what it is. Again, we tested the lows of October. That was big because that breaks below the correction level. Again, I was pounding the table here this whole couple months. I said, a correction is inevitable. A correction is inevitable. It's going to happen. The faster we get out of it, the faster we do it, the faster we get out of it. Now we're above correction territory. Are we out of the woods yet? No, not necessarily. But again, there's a couple of things to watch for that are extremely important. The October lows represent right around a 13% drawdown. And again, if you're telling me that a 100 basis point rise in the Federal Reserve is worth that much in stock value, then we have a real problem because the Fed will never raise. Because you can't go to, if you do it 5 times in a row, 5 years in a row, we're going to go to zero. The market adjusts, always adjusts. Think of it as your body. Your body adjusts to healthy food, your body adjusts to crap, or alcohol, or drugs, or whatever. Your body responds to it. The market responds in a similar fashion as the fact that new information comes in, but at the end of the day, it's emotions. The number 2 most important thing in the market is technical analysis. Why? Because the algorithms, the computers, base their decisions or base their actual levels on technicals. And the third one is fundamentals. And again, the way we print money and in terms of valuations, fundamentals are kind of out the window because gold should be a lot higher than it is now based on our current rate environment. I mean, you name it. There's so many fundamental errors in the stock market and macroeconomics that kind of makes you want to throw the book out the window. But it's important to have, obviously. You want to know why things move the way they do. So again, this is why you are here at the end of the day. So now that we tapped the October low, that is your support currently. 42.59, 42.60. Okay. Right when we broke 42.60 today, I saw something very interesting. That was the stop loss for many traders. Why do I say that? Because right from 42.60 we broke that, we hit 42.40, literally within seconds. So that was all the sell orders from people that were long. As that happened earlier today, that's when it got to the point that the market became extremely oversold. Not just oversold, extremely oversold. This right here, this candle, represents one of the largest candles that we have seen in the stock market in the last year. Literally, this is a daily chart. The last year, this is the highest volume spike that we've had, and it was a green candle today. That tells you a lot. That tells you that the positioning in terms of shorts are pretty much done so far. We do have FOMC on Wednesday. Granted, there's a lot of risk there. But a big green candle like that on the highest spike of a candle on a daily, this is literally the last 12 months, the most volume in E-mini futures, the highest traded security futures-wise on planet Earth. So here's the $1 million question. Have we hit a bottom? Here's the levels you want to look at. Get a pen and paper because this is extremely important. 43.28 is your 10% correction. We closed above that. Here's the second one. 20%. That's a bear market. That's 38.47. 38.47, right? That's still below 4,000, which is a huge number. Do we get there this year? I'm going to tell you right now that we're not going to get there this year. Sorry to disappoint. We're not going to get a bear market this year. This was probably, I can't say the bottom, but in terms of volatile days, this is the most you're going to get. Now, could we hover around 4,200? I would say 4,200 seems to be the right support. Maybe 41.16. But to hit 38.47, that's not happening. I think at worst, max will get max pain is 4,400. Now, 44,000. We're at 44.07. We're still way above that. We're still about 10% above that. So if we are down 7% for the year, 10% is 17, add that 10. So around 4,000 S&P, that's right around 17%. That's probably the best opportunity you're going to get. Today's action really reminded me a lot of March 2020. Let me explain how. March 2020, if you remember on S&P, I kept saying, hey, we still have a little more pain. Yes, obviously, but the world hasn't ended. Things are going to be better. Things are going to be fine. We'll recover. Don't bet against America, all that stuff. But then I said 2,300 was a level I wanted to buy. Why was 2,300 chosen? 2,300 was the drawdown equal to the 2018 December fall. So that equaled 2,300. But no one talks about that. We broke below that. We broke to 2,100. I said the worst max pain we'll get is around 1,800. We didn't get there. That would have been equal to a 2008 kind of move. 2008, end of capitalism, big short type things. Fine. But the thing is the velocity of these moves. To have 7 straight red days, that is extremely rare. So if you bought calls in the morning, it would have been a little difficult. But the timing is the key. So we understand that, okay, let's say we all agree that 4,000 is pretty much the last stop. We're at 4,400. So Carlos, are we going to have any more pain? Yeah, of course we are. Are we going to have pain tomorrow? I think we actually grind higher tomorrow, to be honest with you. I would probably say we'll get to 4,450, maybe 4,500. If 4,500 breaks to the upside, we are now on the right side of the range between 4,740 and 4,500. If we stay below 4,500 for the rest of the week, we will retest 42.68. It really depends today or this week. I would say Wednesday. Wednesday's close will tell me everything because that's right after FOMC. 4,500. Let's see what side. It's either heads or tails. 4,500 is the number you need to have it tattooed on your head. So important in the S&P because that's going to tell us if we still have more weakness going on or coming back, or we're going to actually come back to around 4,600, or maybe look closely to all-time highs again, which will be quicker than you think because corrections like this one had to happen. We've had to have a reset in terms of valuations, a lot of shakeouts out there, which is completely normal. Granted, the average time a correction goes back to where it was before, the average time is within a year. We recovered a 37% drop in 2020 in less than a year. So again, history tells you a lot. It may not be exactly, but history rhymes. The saying goes, history does not repeat, but it usually rhymes. So is there anything to fear here today? No. Why? Because now you know exactly where things are going. Every day the market is giving you a hint on their playbook. Okay, now we know 42.60 is the October low that we can break again. But now we're retesting the 200-day. Is the 200-day, now this will tell me if tomorrow 42.60, 44.24 does not break, this was all a dead cat bounce and we'll retest 4200. What can you do with that information? SPY, Apple, Microsoft, the low beta names, Qs will be more weakness for the foreseeable future, maybe a week or two. But at the end of the day, we need to see earnings coming out this week. Keep in mind, if you have any kind of calls this week, the prices are a little juiced, so it's not your fault or you didn't do something wrong. It's just that implied volatility is up. It's a lot to say, so you can always repeat this. I apologize again for all this stuff. Okay, everybody, what's going on, everybody? Let me go ahead and get to top live chat. Okay, hello, hey Ingrid, Goldman Sachs, GS, sorry. Did I buy anything today? No, I did not buy anything today because I was driving, so I apologize. But I did trade options today. I traded IWM and AMD for profit. So I bought the wrong IWM the first shot, so the signal was worse than I actually had. So I'm still holding that one, and I filled the wrong one. I filled the Wednesday's expiry. I still made money. I got out of it, but again, it was just a mess. So my apologies to the Signal members. I still have that option. Even though you guys got 40, I still didn't get 40, so fingers crossed. But AMD was well done. We caught that. Excellent job. And again, we're just going to look for more opportunities. But in terms of buying shares here, I have not. I bought last week. So again, I buy SPY-G every week. So again, let's see if we can close below 4,300 in order to kind of nibble a 42.60 and see if there's anything that's worth a shot. I definitely want to see some earnings coming up. Apple will tell me a lot. Microsoft will tell me a lot. Tesla will tell me a lot. And we can go from there. So like I told Investment Club today, there's no need to rush. Don't worry about catching a bottom more than understanding that you have targets that you want to use. Again, it may not go exactly the way you want in terms of levels, but if you get close enough, that's fine. But again, focus on your core holdings, the ones that you really are interested in. Don't mess with the high flyer, high betas, even though they had a good day today, which is also indicative of a nice short squeeze bottom. Usually, the high betas go first, small caps run first, and then the rest of the market gets chugged along and pulled. But at the end of the day, would I go and rush and buy anything today? Not as of yet. Wait for a couple of days. Let's see if we bottom out. Again, today was just one day. Do not get too excited either. I'm very optimistic, but again, be cautious as well. I meant IBM did report earnings. My apologies. IWM is what I traded today. Any student discounts for futures traders? As of right now, I'm so focused on the market. I have to speak to marketing on that. My apologies. Can you go over what triggered the rebound and V-shaped recovery? Yes. What triggered the rebound was that first you had a level that was broken, which was right around 40, oh my God, what was it? 42.62. That level was taken out, and then this big green candle, you see this right here, all the way down here? This was all stops. This is all stop loss selling, meaning people who were long used the October lows, which were right here, as a way excuse me, that's not it. October lows, which were right here, that was their stop loss. The stop loss was triggered automatically, and then all of this was all selling. But that came in with the fact that, hey, short squeeze, now all the longs, all the shorts were looking at themselves, hey, I hit my target, which was the October lows, bounced up. And again, you had so many people on the short side. Put call ratios on the CBOE is the highest in history. The put call ratios. There were more puts than calls than any other time since they've measured it. So again, that tells you a lot. So again, what was key here was 42.62. Broken, stop loss selling, and those shorts that were closing their position. Again, I don't know where they were short from, but again, that's a really great target, the October lows, which was also in July as well. So again, you see July, you see October. Could this be a triple bottom? It could be. So again, a lot of shorts were like, I'm done. I made my money. I'm out. And again, there was more buyers than sellers. A lot of dip buyers were buying some stocks that they wanted or what have you. That's a mixture, but the biggest one was technical, all technicals. No, I traded options today. I did not buy stocks today. It's always great hearing from rational advice from these crazy days, right? Hi, man, calls for SPY. Let's take a look at it. I do have some calls for SPY. It was a nice bounce. But again, we talked about the level. We filled some gaps here. Interestingly enough, we filled a gap here on the downside. That's good. Now, again, you can see how close we are to the July lows and the October lows. Your next level is right around 410, 406 if we get a downdraft. I don't think we do. Again, the 200-day is extremely important, 441.86. Wait for that break. Then you can start taking a look at a little more upside. But again, FOMC on Wednesday. So be careful. Don't rush out there to buy. Shop, Amazon, AMD. I don't think Shop is the way to go. I think Amazon's better. I did buy some Amazon last week. Nice bounce at 28.90. But again, if we can get back to 29.30, 3,000, anything below 3,000 I think is worth a shot. But again, that really depends if it's a core holding. If it's more of a speculative name, don't do it. AMD I bought last week. You can see that it was down still 2% on the day. It hit a key level on the Fibonacci level right around 107.63. It was above the 200-day on the daily. Very good. I actually like AMD here. That's been slammed. AMD's a great company. I think AMD has a lot more upside all the way to 128. That's what I really think. I think 128 is going to come sooner rather than later. I think 128 will hit before we ever get to $100. And I think anything below $100 on AMD is an absolute steal, an absolute gift from the gods themselves. Thanks for the insight so far, Carlos. You're bullish on tech as a sector this year. Absolutely. Again, like I said, the main thing that we've had is that we had to get this correction out of the way. We had to go ahead and get that. Very, very key. Have we hit a bottom? Again, no. I explained the levels on the exact bottom. That would be rock bottom, in my opinion. It's not going to go to zero. But at the end of the day, again, guys, 10% correction. Whew, we got it, right? We had 10% correction. We got it out of the way. Now we can breathe a little bit. Now we start looking and seeing what's next. Now we start looking at moving averages. S&P, again, above a 200. I say my level, 4,500, the worst is over. I will say that right now. Above 4,500, the worst is over. But on the NASDAQ side, this is where it gets interesting. So, guys, if you're taking a look at the NASDAQ with me, this is NASDAQ futures, right? And you had a good question regarding tech. Let's take a look at it. Here's where it gets interesting. You have a left shoulder. You have a head here. More than likely, we're going to bounce. The target where we're going to bounce to, based on technical analysis or technical patterns that we should get, is 15,674, your 100-day. And what's going to happen there? If you guys can see my mouse, it'll go like this. 1, 2, and 3. So we'll more than likely retest in a couple of weeks or months, possibly March or end of February. That could happen. But again, beginning of February seasonally is bullish. So again, I expect at least another 1,100 points on NASDAQ. So again, calls will be in play. But once we hit here, that blue line, right there, that 100-day, call it 16,650, 15,674, that's where you want to go ahead and start taking some meat off the table in terms of calls. I wouldn't sell any stock unless you need to, that's fine. But at the end of the day, that's your first resistance right there, 15,674. Right there, we sell off and get the next shoulder pattern, possibly retest 14,500 or 14,000 itself, which we tapped. More than likely, probably just be a round trip where we actually bounce to there and we come back down. That'll complete the head and shoulders. That's usually pretty bearish. So again, we may hover around down for a little bit as we get into the summer seasons. Later spring tends to be a little more bullish. Summer tends to be a little better, with June being a strong month, April being a strong month. That's springtime. And then we start heading over to the stronger months. Again, September is pretty strong. November is very strong. December is pretty strong. October is hit or miss. But then you have August, which is pretty strong as well. So again, it's following the seasonality pattern somewhat, but not exactly. Not all corrections happen at 10%. And if you tell me, oh, February is weak because of 2020 COVID, that was more of a macro thing than it was a technical selling pattern. So again, March tends to be pretty strong. So again, you may want to keep some dry powder in terms of trading, but in terms of stocks here, again, we may have short-term bottom. Again, it's very oversold where we were. So again, unless you plan to hold these stocks for at least 5 years, don't even buy anything, because then the volatility is going to drive you nuts. I know it's a lot to say. Update on crypto. Crypto is up right now, at least Bitcoin is the last 24 hours up about 3%. Again, I buy every week anyways on autopilot. I'm not really worried about it. But again, Bitcoin was bouncing first before the market did. Bitcoin and crypto are leading indicators. Why? Because they are risk on. When people are wanting more return, it's risk on. When people are afraid, it's risk off. Always remember that. Any names that I'm looking at? Yes, I'm looking at, of course, more AMD. I think below 100 is worth it. Facebook, right below 300. I wish I would have got that. I was driving. Below 300, I think, is worth a shot. Nvidia, that's probably, I think, more than likely, that thing probably hit a bottom. I would say right at that 220 level, if you can catch a 220 on Nvidia or below 200, it's worth a shot. Totally worth owning. Nvidia is a cash cow, and they're an amazing company. So again, it's a lot to discuss, guys, but I really want to talk about context. And at the end of the day, you got to understand that, again, emotions run the market. Technicals are next, and then you have fundamentals. So I'm pretty sure, like today, you're probably saying to yourself, my God, a horrific morning, the world's going to end. You have the CNBC screens on in terms of market despair, market whatever, bear market, markets in turmoil, excuse me. So with that being said, don't tie your emotions to the stock market prices. It's just numbers. At the end of the day, a good investment, when you made it, is still a good investment here later, depending on why you bought it. So I would focus now on your core holdings. Start making a list of names that you want to purchase at a good price. We are not at the bottom yet, but today is indicative of a good bottom move. Usually when you have this kind of volatility, especially that kind of daily turnaround on a daily candle, that's not very usual. Again, that's usually indicative of a bottom. Again, that stop selling told me a lot. That stop loss told me tons. That told me that more than likely the selling is over at those levels. Now, could we go ahead and retest, again, back to those October lows around 42.62? Absolutely, we could definitely get there. Again, just due to the FOMC, but again, 4,500. If we can get above 4,500, if we can get the VIX below 20 or 25, or VIX below 20, that's a really good sign. And again, Treasury yields going down. So again, so far, again, you just had a wild ride. You just basically watched the Bills and the Chiefs on loop, which was a great game, by the way. Again, you just had a wild ride today. Tomorrow is another day. We see what happens. Let's take a look at what's going to happen tomorrow. We have consumer confidence, not much crazy. Wednesday is a big day. Wednesday is a big day. A lot of positioning, I'm assuming, in terms of the market. So again, do not tie your emotions as an investor to asset prices today. Again, you can put your targets. You can go ahead and get your shopping cart ready. That's okay. But other than that, again, it's just a move today. It was a crazy move. Yes, was total ups and downs, up and downs. We know volatility, but at the end of the day, guys, know your targets, know what you're trying to do first. Make a plan. Without a plan, you're planning to fail at the end of the day. So again, if you're a trader right now, 4,500 is on your watch list. 4,500 in the S&P. If we can get there by the end of the day, Wednesday, I consider that a big win for the bulls. A big win for an investor. So again, more than likely, what we're seeing is indicative of bottom, but Nasdaq's scaring me. Nasdaq looks like it's a head and shoulders. So that may derail a little bit of that bottom talk, but now we know the support is those October lows. Then we can go from there. As long if we can retake the December lows, that'd be great. But again, one step at a time. Let's take a look at futures tonight, see where it goes. Small caps will be a very big indicator. They had a great day today. Let's see if the rest, the tech names come, industrials come as well, and they join the party. So again, 4,500. Need to be reminded as always. Expectations for FOMC, none. There's not going to be any rate cuts or rate hikes or anything like that. So don't expect much. Just a setup, the same kind of setup of what they're expecting in terms of rate hikes. The key stuff might say, if Powell says we are not stuck on a certain timeline in terms of raising rates, we are flexible and fluid, anything around that, the market's going to soar. If he says we will be hiking at least rates shortly, that means March. We'll retest a little bit more downside to around that October low. So October low is key, 4,500 is key. Keep that in mind. That's 42.62, 4,500 on ES, which is S&P. So keep that in mind. Let's see what we get tonight. I'll keep you guys up to date as always on Twitter. Thank you so much for your time. I know it was so much to talk about, but again, it's on these red days. I really like to talk to you guys. When it's a green day, I mean, there's not much. Everyone feels like a genius, which I totally understand. But these red days, guys, it's so important to keep things in context on the real mechanics of why things happen. Because when you understand the game, you can win the game. When you don't know the rules, you can't win. So understand the rules of why things happen, you will win down the line. So again, we'll see what we get. I don't know what Biden will say to Jay Powell. I mean, that's above my pay grade. I'm not in the White House, but yeah, we'll go from there. Have a great rest of your day, guys. Hit that like button if you love these videos. This is recorded, so no worries. Take a look at our channel at G.A.R Capital on Instagram and of course on Twitter. Thank you so much, guys. Have a great rest of your day. Have no fear. No one makes a dollar panicking. Understand that. As always, have a plan and you'll be great. I know that. Have a good one, guys.